Hello students, welcome to accounting class. I am Narsimulu, commerce lecturer. In this video, I will teach you the important chapter from accountancy, that is depreciation accounting. In this video, I will explain one simple problem from the depreciation chapter. After completion of this video, or at the end of watching this video, you will be able to solve a simple problem from the depreciation chapter. So the main objective of this video, you can understand the method how to calculate the annual depreciation of an asset under fixed installment method using formula. You can also understand about various components that we use to calculate depreciation, like cost of asset, installation charges, scrap value or residual value, and estimated useful life of an asset. And here I will explain depreciation account from CC second year accountancy. One simple problem. Dear students, here one problem I have chosen to explain you. Let me read the problem first to make you understand the problem better. Here we are going to calculate the depreciation under fixed installment method. This method is also called as straight line method or original cost method. Okay, let me read the problem first. Sri Venkateshwara Traders purchased furniture costing rupees 50,000 on 1st January 2015. Depreciation is provided annually under fixed installment method. Estimated life of the furniture is 10 years. The scrap value at the end of its life is rupees 10,000. Prepare furniture account for 3 years, assuming that accounts are closed on 31st December every year. So this is the problem. So in this problem there are so many points which are helpful for us for calculation the depreciation under fixed installment method. So the important points that we need for the calculation of depreciation under fixed installment method are the cost of asset and the estimated life or the estimated useful life of an asset and the scrap value. So these are the major points that we use for the calculation of a depreciation. So we have to extract important points from this problem under working notes. So just see the next slide, you can understand how I have extracted different points from this problem. See, in the step 1 we need to see under which method we are asked to prepare calculate the depreciation. So point A, here it is clearly given that we need to calculate the depreciation under fixed installment method. Second point, for how many years we need to we are asked to prepare asset account. So 3 years. In the problem it is clearly given that in the last paragraph, prepare furniture account for 3 years, assuming that accounts are closed on 31st December every year. So this is the point. So here we need to prepare asset account for 3 years. This is the B point. And some other important working note points I have extracted from this problem. See, cost of the asset furniture. So rupees 50,000. And second point, installation charges. So in this problem there is no installation charges, so we can show it as nil point. Here we are not given any installation charges in this problem, so that is nil. If it is given, then we can go to add that figure to cost of asset while we calculating the depreciation. And come to third point, a residual value or scrap value of the asset, that is rupees 10,000. In the problem it is clearly given the cost of the residual value of the asset is rupees 10,000. See here, the scrap value at the end of its life is rupees 10,000. So with this we can understand the residual value or scrap value of the asset is rupees 10,000. And the next point, estimated useful life of the asset, that is 10 years. In the problem it is clearly given the estimated life of asset. The estimated life of asset is 10 years. So these are the important working note points we have to extract from the given problem. After that we need to calculate depreciation using some formula. See, calculation of annual depreciation under fixed installment method. So here we have to use a formula, that is annual depreciation is equal to cost of asset plus installation charges minus scrap value divided by estimated useful life of asset. This is the formula we have to use for calculation the annual depreciation under fixed installment method. Now we can go to substitute the values in the formula. See, cost of asset is 50,000 and installation charges nil minus scrap value, that is rupees 10,000, and estimated useful life of asset is here 10 years. So 40,000 divided by 10, or we can say here 50,000 plus 0 equal to 50,000 minus 10,000, that is 40,000. 40,000 divided by 10, then we can get 4,000. So here rupees 4,000 annual depreciation of the asset. So in this way we need to calculate the depreciation on asset value. So this formula can be used when in the problem the estimated useful life of asset is given. So remember this point in your mind, that this formula can be used only when the estimated useful life of asset is given in the problem. Okay student, so what is the formula here? Annual depreciation is equal to cost of asset plus installation charges minus scrap value divided by estimated useful life of the asset. So after calculating this depreciation amount per annum, next we need to prepare the asset account for 3 years. See how we prepared the asset account. So first you can go to first we need to prepare the asset account, means ledger account, pro forma, debit side and credit side. Debit side there are 4 columns. First column meant for date, second column is meant for particulars, and third column is meant for JF number, and fourth column is meant for amount, that is in rupees. And similarly credit side, again 4 columns we need to prepare: date, particulars, JF number, amount. Okay, left hand side 4 columns and right hand side 4 columns. And on the top of this pro forma you can go to write the asset name, that is furniture account. Okay, so here debit side in the date column, so on the date on the date when we purchase the asset, that date should be considered here. See in the problem, the asset is purchased on 1st January 2000 15. So here in the asset account, debit side, in the asset account debit side, we have to write as a to bank account. We have to write as a bank account. See here, debit side I have written to bank account purchase 50,000. So at the end of the year, means 31st December 2015, by depreciation account, credit side you can go to write in the particulars column, by depreciation account rupees 4,000. Here that is rupees 4,000, and here from 50,000 we can go to deduct 4,000. Then you will get some amount, that is the difference amount, that is called closing balance. If you see here, the closing balance is 46,000, that we ascertain, that we ascertain 46,000. Okay, next you see the closing balance become the opening balance for the next year. See, on 1st January 2016, debit side we written as to balance brought down rupees 46,000. Again, at the end of the year 31st December 2016, by depreciation account rupees 4,000. Here we need to charge 4,000 rupees depreciation amount on the credit side of the account. Again we need to find out the closing balance. See here, the closing balance from 46,000 we can go to deduct 4,000, then we will get 42,000. This is the closing balance for the second year. The same closing balance become the closing balance become the opening balance for the next year. So on 1st January 2017, to balance brought down rupees 42,000. Here we on the debit side of the asset account we can go to write 42,000 as a opening balance on 1st January 2017, rupees 42,000. And at the end of the year again we can go to write means 31st December 2017, that is the end of the year. On the date we can go to write credit side in the particulars column, by depreciation account rupees 4,000, and again we need to find out the closing balance. So from 42,000 if we deduct 4,000, we will get 38,000, that is the closing balance of the asset on 31st December 2007. And again this balance we can go to show in the next year as opening balance. But in this problem we ask to prepare the asset account for 3 years. So here we prepared the asset account for 3 years, first year, second year, third year. So if you observe this account, you will notice one thing, that depreciation amount is charged every year equally. So here there is no change in the depreciation amount that we charged every year ending on the asset. So we call it as fixed installment method, or straight line method, or original cost method. So in this way we need to prepare the asset account. So this problem will come in the annual examinations for 5 marks. Definitely one problem you will get in the annual exams. So repeatedly you can watch the video until you understand the entire concept and method of preparation of ledger account or asset account. Okay, thank you students watching this video.